Welcome friends to this webinar on developing and analyzing cash flow statements. Okay friends, let's get started for today's webinar on developing and analyzing cash flow. This is a 1-hour webinar which talks about creating a template of a cash flow and linking it to income statement and balance sheet. We are using a company called LinkedIn. This company has recently launched their IPO, so we'll learn right from scratch how to develop and analyze a cash flow statement. We will follow indirect cash flow method. Feel free to post your questions at any point. Since it's a 1-hour webinar, I may not be able to answer all the questions, but I'll pick the questions which are relevant and needs to be addressed to the class then and there. We will answer all the questions. Don't worry, keep posting your questions. Some of them will be answered by chat window, and some we will answer on email. So do post your email ID with your questions in case they do not get answered. Otherwise, we will ensure that everything gets answered during the 1-hour webinar. Before I get started, quick outlook on EduPristine. EduPristine is an authorized training provider of CFA, GARP, that's the authorized training provider of FRM, Financial Risk Management. Both of them are golden certificates in finance. They are authorized training provider from FPSB India and Premia PRMIA for certifications in PRM and APRM. These are some of the key associations that EduPristine is aligned. They have conducted a lot of trainings at Ernst & Young, BOA, Financial Modeling in Excel at JB Morgan, and various other big names and organizations have been trained via EduPristine. Not only big organizations, the institutes, all the famous big institutes of the world have been trained by EduPristine on financial modeling. In fact, the curriculum has been developed in consultation with academia and the industry. Finally, these are the sites where we are present. We've got global online presence and training centers at Singapore, Middle East, that's what we are targeting, USA, all the big cities of India. Successfully conducted many hours of training throughout the world. And we are here to cover a 1-hour webinar on cash flow statements. There is a small technical glitch. Just wait for slides to move on. Okay, so these are the steps that we're going to cover today to talk about cash flow statement. I'll begin with the introduction of cash flow statements. It's assumed that you have basic idea about cash flows. Then I'll talk about the 4 baby steps that we will take in order to create our final cash flow statement. The first one is to get the relevant data from the company's website. The second step is to first classify the balance sheet items, because it's an indirect cash flow which uses balance sheet assets and liabilities and income statement to compute and create the cash flow statement in Excel. Finally, we'll close our cash flow statement by calculating next year balance sheet cash. Okay, so these are the 4 baby steps we will take to reach to the end. So what is a cash flow statement? When we talk about cash flow, we are talking about real money. There is no accrual accounting, unlike an income statement where we are talking about only cash outflows and inflows. Anytime a cash receipt or a payment over a particular period, which means in a particular financial year, happens, we report that. If there is any operating, investing or financing activity, we report that. We segregate into 3 pieces: operating, which impacts the operations; investing, like buying and selling assets which have future long-term benefits; and financial activities, which is like sourcing of funds from debt and equity holders. The cash flows actually help us understand the quality of income statement, which means that how the accrual accounting in income statement qualitatively represents how much is the real cash that flowed in and out of the company. Okay, so this is the end in mind, and we will begin with the end in mind, that I need to develop a nice cash flow statement template for LinkedIn. And there are 3 segments: operating activities, financing activities, and investing activities. So cash flow from investing activities. Okay, and we all know within operating activity we'll have all the line items where we start with the net income, we subtract the change in assets and add back the change in liabilities. Take a look at these numbers right here. The negative ones are highlighted in red. We're going to do that. Once we have computed the final net cash flow during this period, during the financial year, we will add this to the previous balance sheet cash to get to our final cash at the end of the period or in next year balance sheet. Okay, so let's go and build the cash flow statement for LinkedIn starting from scratch. So step 1, get the relevant data. You go to the LinkedIn website, you click on link called Investor Relations. Every company has to report their annual financial statements to SEC in the US. So you go to the SEC filing link, you click on that, and what you get, what you see is the different years that you can pick from, and you can pick the annual reports from there, and you have choices. The choices is the format in which you can download the raw data, and we recommend either use PDF or use Excel. Okay, you're going to open the Excel file from the website data, and the first thing you will classify is the balance sheet. So that's our step 2, looking at the balance sheet of the raw data. The data that you will see when you download the Excel, the data that you see is a raw data which consists of all the financial statements, income statement, balance sheet, and cash flow statement. Don't pick it as it is. We are developing our own model. And since we are developing our own model, I need to copy paste the raw data and compute the cash flow statements from there. Okay, so we got the data. You have opened the balance sheet, right, by classifying the data in the balance sheet. There's a webinar that we did which talks about how to create a balance sheet from the raw data. Okay, and look at that webinar to get a balance sheet like this. There's a webinar on how to create income statement. Do look at that. Once you have watched the balance sheet and income statement, you will come to the cash flow statement. But let's assume that you have the balance sheet which consists of current assets, total current liabilities, and somewhere down shareholder equity. You look at the years, it starts from 2010 till 2012. Okay, and in order to compute the cash flow statement, right, what I do is I go to the raw data. This is the XLS that I picked from SEC filing link, LinkedIn website. Now I got this raw data. It is not very organized. Okay, so you need to pick the data for balance sheet from here. Okay, once you've done that, you need to mark on the right hand side of the balance sheet in one of the columns whether this asset, okay, or liability belongs to operating, investing, or financing activity. Because we all know the indirect cash flow statement is created by adding to income any increase in liability or any decrease in asset over the year. Increase in liability is cash inflow, because if you are increasing your accounts payable, which is a liability, accounts payable, then you have not paid the money to your vendor, hence your cash flow goes up. On the other hand, if you increase your assets, let's say you buy a plant, that's in cash outflow, so cash goes down. Because you have bought something, the cash goes out. So increase in asset is a cash outflow, and increase in liability is a cash inflow. That's how you treat it. So you pick the income and add back any increase in liability and subtract any increase in asset to get the net cash flow. Okay, that means balance sheet is involved to get the indirect cash flow. So here we are earmarking the balance sheet items, whether they are investing or operating or financing. So here we go. Any short-term investment which is not helping in operations is an investing activity. All the current assets which impact operations like accounts receivable, prepaid expenses, all of these are operating in nature. If you have the fixed assets like property, plant and equipment, big intangible assets like patents, all that are earmarked as investing activity. If you look at the short-term liabilities, they are all operating in nature, right? The long-term liability is going to be financing in nature. So you need to mark that so that you don't make any mistake while computing the cash flow statement. Okay, so we have classified the balance sheet items as operating, investing, or financing. Okay, I'm just taking you through the whole process, and then I'll pick a real template, Excel sheet template, and then we'll do that together right here. Okay, so once you have classified the balance sheet items, it's time to create the cash flow statement. So we are here at baby step 3, which is creating a cash flow statement. We start with operating activities, and remember, indirect cash flow starts with net income, and then we subtract increase in assets and add any increase in liabilities during the year. Okay, so here we go. Start with the cash flow statement. You got the line items here on the left. Leave a space after every segment. So you got operating, leave a space, leave a cell, investing. Leave some spaces at the top for a header. That's very important. People miss that. You get to have the units, thousands, millions. Get the currency right. Make sure you represent your years in a nice fashion like FY 2011-12 financial year. And not just that, you put the year ending. How to do that? Select all these guys. Press Control 1. Control 1 is a shortcut for formatting the cell. We will soon do that together. Go to the custom, don't go to the number, move down, custom. There's a nice custom called FY#0. Once you pick that, 2010 will be shown as FY 2010. It is shown like this. Behind the scene, Excel is still storing it as 2010. Okay? So you get the right format, you put the year ending. Different countries have different year ending. March 31st is for India, December 31st is for US. Different companies can choose different months for their financial year ending. Okay? So it's important you put that here in the header. Once you've done that, let's start with entering the net income, the very first item for cash flow statement. So I get the net income inside it. So I get the net income to begin with, and I would do what? I have to subtract any increase in assets because that is cash outflow. Any decrease in asset is a cash inflow, so that increases cash. And it's opposite for liabilities. Increase in liability is a cash inflow, decrease in liability is a cash outflow. So remember that any change in the asset, which is current year minus previous year, will be subtracted. So if this was positive, it will give negative cash flow. Any change in liabilities, current minus previous, will be added because increase in liability this year compared to previous year is an increase in cash flow. Okay, so start with income statement. One point to note, you are starting with 2011, not with 2010. You cannot start with 2010 because you don't have 2009 balance sheet. You always need a current balance sheet and a previous balance sheet to take the difference. Okay, so we start with 2011 and you have linked the net income from the income statement. Now we are linking the account receivable from the balance sheet. So balance sheet, current minus previous accounts receivable. You can see I have put a negative sign here, negative of current minus previous for the assets. Why there is a negative sign? Because if this guy is positive, it means there is an increase in asset. And any increase in asset is a decrease in cash flow. So put a negative sign here. Okay. Similarly, do it for every other current asset under operating items. Once you got that, right, there has been increase in asset and that's treated as negative cash flow for operations. Now let's get to the liabilities. For liabilities, there is no negative sign here. It's all positive. So current minus previous year liability. If there is an increase in liability, there is an increase in cash. Okay. So I do it for all the liabilities. And I am done. I am done with all the line items in the operating cash flow. We'll move on to investing activities. We'll go and take a look at short-term investments. Any increase in investments, these are long-term assets, once again will be a negative cash flow. So put a negative sign in front of delta. For financing activities, any increase in long-term liabilities or equity all means positive cash. So don't put a minus sign. Just say current minus previous long-term liabilities and shareholder equity. You get all these items. Look, I am doing it for one column right now. Once I'm done with one column, I'll copy paste it to get all future years automatically, because formula is copied in Excel using relative reference. Okay, so it's about time to get into the Excel sheet together, but before that, let's see how to get the final cash balance. We have computed all line items, and all I have to do is take a sum of these guys. Take a sum in order to get cash flow from operating activities. Then I take sum of all investing line items. And once I take this sum, I get the cash flow from investing activities. Then I start taking sum for the third segment, and I get cash flow for financing activities. So I take a sum. Can you see that? The sum here. So I've got sum of all three independent segments. Now what I have to do is individually add the subtotals, which means add this guy, and add this guy. All three are added to get the net cash flow during the year. This is during the year. So I have got the net cash for year 2010 or 11, whichever year I'm picking, I got it. But that's not the cash that will go to the balance sheet. The cash in the balance sheet, look here, we just computed this, the total change, 246097, look at here, 246097. So we are here And what I do is I pick the previous year cash balance from the balance sheet. Okay, and I say the end of last year is same as beginning of this year. So the beginning period cash, the change, they both get added to give end of period cash for this year. Okay. Similarly, I do it for the next year. The ending cash balance becomes next year beginning cash. I add the change, this year change with the beginning to get the ending cash balance in my balance sheet. Okay, and you know what? That creates the basic cash flow statement that I have been looking for. This is our final cash flow statement, and as you can see, it is starting from 2011. We don't have anything for 2010 because our balance sheet starts from here. My cash flow statements are always computed 1 year ahead of the minimum balance sheet year available. Okay. So at this stage, I think let's get back to our Excel template and let's do it together. Let's do it together. So here is my Excel template. You can see that I need to develop financial modeling statement. Let me just enlarge it. Okay, this is now clearly visible. Now what I have, this is the income statement, right? We created it in one of the webinars, but let's assume today that we have been given the income statement starting year 2010. Okay, and then go down and we have the balance sheet as well, and are the various balance sheet items. You can see that all the current assets, total assets, everything is given to me. Okay, so we've got the balance sheet, which is again starting year 2010. Now we go to the cash flow statement. First, note the nice headers that I have put here. Can you see the headers which have got the year ending, the FY number, the financial year? Behind the scene, the number is 2011. It is just shown as FY. Okay. So how to do that? Select this, Control 1, pick the custom format which has FY in the beginning. Okay. So here are the three segments. I have got operating activity. Okay. I have got this investing activity right here in the middle. So that's the second thing. I go down and I also have the financing activities. Okay. So I've got the three segments here, and I'll fill one after the other. I'll start with operating activity 2011. Net income. To fill the net income, say equal to, control page up to actually go to the income statement of year 2011. Note 2011 is in D column, and this 2011 will remain in D column in every statement. That's the arrangement I have created. Okay. So I go here, link it, control page up, link it to the net income, which is right at the bottom, net income in 2011. I got it. income statement. Next is the account receivable, deferred commissions, till other current assets. Okay, these are all the current assets, and what I'll do for them is equal to minus I need to go to the balance sheet of year 2011 and look at the account receivable. Here it is, and I subtract the previous year account receivable and close the bracket. You can look here the formula I have used. I press enter and I get the number here. So negative sign because increase in asset is a cash outflow. Account receivable, deferred commission, prepaid expense, other current assets. If I go up, I have arranged my balance sheet exactly in the same format. Next 4 items are same as next 4 items here, so I just copy paste it 4 times so that my other current assets refer to balance sheet, and if I go back it's referring to these 2 cells. Okay, so I got it right. The next one starts the liability. For liability, what should I do? I should just say current balance sheet liability, which is the accounts payable right here for current year, minus the accounts payable for previous year. Press enter. That's what I wanted. No negative sign. Increase in liability is increase in cash flow. For next 4 items, I just copy paste this till deferred tax liabilities. Why am I doing that? Because I know that this deferred tax liability refers to total current liability. The deferred tax liability is one below, so my copy paste won't work. I have to increase it by 1 number. Now if I do control square bracket, it is going to deferred tax liabilities right here. I have to be careful while copy pasting. Okay, let's look at deferred revenue. So I do this, it is going to deferred revenue in balance sheet, which is fine. Cash flow from operating activities is nothing but sum of all above. Okay, so you say alt plus or take a sum of all these items. That's the cash flow from operating activities. Okay, then you go to the investing activities. Once again, any increase, put a negative sign here. Any increase in a long-term asset is also an outflow. So I say minus, bracket start, go to the short-term investment in balance sheet. Here is the short-term investment for current year minus the previous year, bracket close. I got it. Similarly, negative sign, bracket start, property and equipment. Property and equipment is right here in long-term assets, current year minus previous year, close the bracket, you got it. Okay, then let's copy paste till other assets and let's see whether it is referring to the right one. Yes, the property, goodwill, intangible other assets are one after the other in balance sheet as well as in cash flow. So I can copy paste the formula down. Okay, so cash flow from investing activity is nothing but sum of all the above guys, and I got it. And here I go, the last thing, the financing activities. These are all liabilities, so no negative sign in front, equal to, where is the balance sheet for long-term liabilities? Here is the long-term liability for current year minus previous year. Press enter, I got this. I've got the convertible stocks, so then now I'm going to convertible stocks, again equal to negative, going balance sheet. Here is the item this year minus convertible pre-year. Got it for convertible. Let's copy paste till accumulated other comprehensive income. Just check. Yes, it is referring to accumulated other comprehensive income. Once again, they are arranged in contiguous manner in the balance sheet, so I can copy paste the formula in the cash flow statement. Then again, I take a sum of all these financing activities, and that's the cash flow from financing activity. Okay. Look at this blue number. That's the number taken from previous balance sheet cash flow. Okay. I know the previous year sheet cash flow is going to be the year's beginning cash flow. Similarly, this should be equal to this cell, even though I have not put value. Now it's time to fill the net cash flow that changed during the year, which is the sum of all three segments. This segment plus this segment plus our net operating segment. So I got this number. Is that right? This plus that. Okay. And this will be the sum of these two guys. The net change here and the value here. Okay. Similarly, we'll copy paste the whole formula. So what I'll do, I'll select the whole guy for 2011. Copy paste it in 2012 as it is. And you know what? I get it for 2012. The beginning year is same as the ending year cash. I add the any change during this year, and I will take the sum of these two guys to get the total sum change in cash. Complete cash flow statement for year 2011 and 12. Once again, you start with net income, you subtract all the assets, add back all the liabilities change, then add all the three segments right at the bottom, add it to previous year cash flows, and get the net value. Any questions at this stage? There's one question by Ali, why we have got negative numbers for assets compared to the last year. That's why the numbers are negative here in cash flow, because that's cash outflow. There's a question by Mustafa, then why liabilities are positive? Because there is a increase in, let's look at liabilities right here. There's an increase in liabilities as well. And if liabilities increase, there's a decrease, there's an increase in cash flow. So that's why increase in liability is treated as positive. Then you take sum of all these guys to get the net operating cash flow. Then you go and look at the short-term investments. Right, the short-term investments you can see has gone up. In other words, that's a cash outflow. Similarly, all the values of assets, intangible assets, all that has resulted in decrease in cash flow from investing activities. And last but not the least, other long-term liabilities. You have to be careful that you don't put a negative sign when you are talking about liabilities. Okay? Or stockholder equity, they are both same. Don't put a negative sign there. Make sure they are all positive. Right? I made a bit mistake putting a negative sign. So you can take a look. I'm talking about convertible preferred stocks, equity, all that is just current sell minus previous sell. And once you do that, okay, you get the net cash flow in the end, which is sum of individual segments. Okay, so be careful about signs while you pick liability versus assets. Any other question at this stage? Okay, so before we conclude the class, here is a quick look at the financial modeling masterclass that is conducted in Middle East. It's a 2-day masterclass. On the right, what you see is the places where this is conducted and the dates. EduPristine is the training provider. Idea is that you can build your own model from scratch right from the beginning. The focus is on learning the shortcuts to develop quick models. Not only that, you should be able to do sensitivity and charting analysis and debug your big integrated models if there is any bug or error. If you belong to any of these communities, this will be useful to you. This is the day agenda, which starts with creating a scalable financial model, getting the growth drivers and the cost drivers, finally building the asset debt schedule for a company, the P&L, the balance sheet. Next day you project the cash flow, you analyze all the ratios, and you value the company using DCF and comparable analysis. So once you get the valuation done, you do the scenario analysis and build a nice dashboard to do scenario analysis on various values. We've got highly experienced faculty who has taken huge number of trainings and has been working in senior positions at big banks. What you get out of this training is all the templates, workbooks, guides, and videos. EduPristine is known for its material, the financial models, those can be reused in future. Following our details for the cost, that includes all these things. And the final thing, is all the contact numbers on the right if you want to contact them, and all the dates on the left where the training would be conducted. Question by Deepak: do we conduct this training in India? Yes, of course. In Hyderabad, yes, there is a Pristine Center in Hyderabad. Feel free to contact the Pristine contact point, and they will guide you about trainings in Hyderabad, what are the dates. They can even tell you the training center which is close to your home. Okay, I hope that answers the question. Okay, so it's time that we quickly talk about the 4 points that we learned. The 4 points that we learned is: first, pick the raw data from SEC filings. That's number 1. The second point was, once you get the raw data, create the initial financial statements like balance sheet, okay, income statement, compute the indirect cash flow statement. Make sure you get the formatting right and link the previous year balance sheet with current year cash flow change to get the final cash in current year balance sheet. There's a question by Bruno. Do you have conducted some trainings in Southern Africa? There have been online trainings in Southern Africa. I would recommend you to get in touch with the EduPristine contact line, and they will let you know if there is any plans for trainings in your area. I'm sure there will be one either online or physical session at that part of the world. Okay. So I'll be here for next 5 minutes. If you have any questions, please post, and we will drop either an email to answer your questions, or we will respond on the chat box. Okay, so that's it for the day. Thank you very much for your patience.